Hello, Mark. Thank you for taking the time to see me today.
Sure.
Yeah, I believe you want to talk about auto-enrolment, is that right?
Correct.
Yeah. And you've received your letter from the regulator, I believe.
hmm
So do you want to tell me a little bit about that?
Yeah, basically said that our auto enrolment date is round about this time next year.
This time next year. Okay, well, that's a good time to talk about it now and look at your options. As it said in the letter, the employer really needs to start looking at things 12 months before because there are a lot of tasks that need to be done. So tasks need to be done now, tasks in 6 months' time, and tasks at staging day and on an ongoing basis. So it's great that you've taken the opportunity to look at it now.
Good.
So congratulations
Thank
on
you.
that one. Would it help if I told you a little bit about the Workplace Pensions Direct, which is the company that I think could potentially be a solution for you?
Yes, please.
Yeah, so I've kind of looked around the market and I've looked at a number of auto-enrolment specialists in the market. We've come up with this Workplace Pensions Direct. They seem to be sort of head and shoulders above the others in what they do. An established company, national base. They've got thousands of clients, so they work with over 1,000 businesses in the UK. They really got it off to a T. All they do is auto-enrolment. So it doesn't interfere. I'm an advisor, so it doesn't interfere with anything I do, and the accountants use them as well. There's no selling of things into the clients. So they're a good partner. They seem to be the best at what they do. They seem to be the market leader. So we have a lot of confidence in them. There's a lot of reasons that we have chosen to use them. So I'll talk a little bit more about that. But before I do, I just wanted to ask you some questions about yourself and your business and your situation at the moment. Could you tell me sort of how many people you employ?
Okay, we have 5 full-time and 1 part-time
Right.
staff.
Okay. And sort of obviously, if people earn over £10,000 or more and are between the ages of 22 and state pension age, then they would need to be automatically enrolled into the pension scheme.
Right, okay.
So does that capture all of your staff, or?
Everybody earns over £10,000. We have 1 member of staff who's 19.
Right, okay. So 19 means that the class is a non-eligible employee, which means that they are to be offered a pension scheme, so they have to be offered, but they're not automatically enrolled into it. So it's given the choice. And if they choose to join the pension scheme, then the employer, yourself, has to contribute for them. So we need to assess the employees, and that needs to be done every pay cycle to decide, as a 19-year-old becomes 20, 21, 22, they change category. So we need to keep track of that. And if part-time people work less hours and 1 month they're getting paid a little below 10, because it's worked on a pay cycle basis, the threshold. So we can talk about that in due course. So in terms of the options that you've been looking at, what sort of have you considered as a route to meeting the requirements of the regulator?
Okay, we spoke to our accountancy firm and asked them about whether or not they could help.
Right.
We also look potentially at doing it by ourselves.
Right, okay.
And obviously speaking to someone such as you.
Yeah, thank you. So there's several options there that you've looked at, and I can help you explore the pros and cons of each of the options. But I just got a couple of more questions before I do that, if that's okay. You mentioned about doing it yourself. So what experience do you have within the business on sort of payroll or the pension aspects or the administration aspects there?
Okay, well, basically my PA does our bookkeeping as well.
Right, okay.
So she looks after our payroll. She's from a non-finance background, and it's something that I've kind of slowly but surely kind of asked her to do as we work together. But she would certainly not be a financial expert. Okay,
and you mentioned that your staging date is in the summer of next year?
Correct, yes, August 17.
So from your payroll person, you mentioned they work sometimes and not others. So are they here all the time?
No, actually, that particular person works at school term.
Right.
So actually, she has most of August off.
Okay, so that's not a good time for me.
It's not ideal, no.
Okay, no, it's very helpful, thank you. And you mentioned there you've spoken to your accountant and you've been looking at the advisor options. So you've spoken to a number of advisors already?
No, spoken to one or two advisors.
Right. Okay.
And the accountant said that they couldn't help us. We would need to speak to a financial advisor. Okay.
That's often the case because the accountant tends to be good at bookkeeping and payroll, which is a certain aspect of auto-enrolment, but there's also a pension scheme that needs to be set up. And most accountants, I'll just show you here that the pension regulator says that the accountants are a lot of accountants are not really interested in pension aspects. So this task to be done, the accountant will look at the payroll side of it, but not the pension side of it. Similarly, although we don't have this from the regulator, but the financial advisor would be similarly, they would look at the pension aspects and not the accountant aspects. So your choice really is to do it yourself, to use a combination of an accountant and a financial advisor, or you could use an accountant and do it yourself. Mm-hmm. That's an option, so we'll look at that. Or you could use a service like Workplace Pensions Direct, which is a specialist, sort of a low-cost operator, sort of which I'll go on and talk to you. Would it be helpful if I explain sort of the pros and cons of some of those options for you?
Perfect.
Brilliant. Okay. Well, I'll give you a quick overview of each of the options, and then we can touch upon the pros and cons. So you mentioned doing it yourself. So the advantage there is there's an immediate cost saving that you're not paying an advisor. And one of the pension schemes you could do is Nest. So with Nest, that's the government-backed workplace pension scheme. There isn't an employer pension charge. So you can look at that and think, well, that's great because there's immediate cost savings. So I'm going to save the cost of advice or business advisor straight away. So that's great. So that is a pro on that. One of the do you realise kind of what's involved? Have you any idea about how much work would be involved in this? Okay. Well, let me show you. We've broken it down into 22 tasks. So there are a number of tasks, like you say, starting from now, where you have to nominate a contact, and it goes all the way through up until 5 months after the staging date. So you'll still be doing this, coming Christmas next year. To what you would be doing there is you would be completing a declaration of compliance. And then ongoing, task number 22, if you like, is you would actually have ongoing duties to meet on an ongoing basis. So I'd like to just show you this survey. This is from a chap called Dr. Ian Clacker. He's at Leeds University Business School. And he looked at these 22 tasks and said, how long would it take somebody to do those tasks? And he did some research in the marketplace. And it came back on, typically it would take a business about a day a task. So that's about 20 days work, as you can see. So and on an ongoing basis, every month, it would be on average 3 days a month for your in-house person to actually do this work. So, of course, again, the advantage is you're keeping it all in-house, but then the person that you have in-house could be doing other things that are kind of more attractive for your business. So that's a kind of consideration to, and obviously their time, 20 days, that's virtually a month of their salary that you kind of have to find for them to do this. Plus, I wanted to show you this this report here, this pile of papers on the desk in front of you. That's the pension regulator guidance notes. It's actually 1,000 pages there. It's 4.5 inches thick. Now, the regulator's guidance, they make it seem simple online that you just kind of go through this duties checker, they call it. But actually, when that might get you across the line of compliance to your declaration of compliance. But if they came and did an audit on your business, the detailed guidance is what they would measure you against. They would see that you've put the right people into the pension scheme, that you've not put people into the pension scheme that shouldn't be in, that you've given the right communications, that they've got right records, that you've done right the assessments, and there's a chapter on each of those within the detailed guidance. So really, you need somebody when you're setting up a scheme to know that process, to know that guidance, And it needs to be your in-house person, your advisor, or your accountant, or workplace pensions direct, or whoever you choose it to use for that. But you need to take into consideration the detailed guidance and the risk of being audited. It's a bit like the VAT man coming and having a look at your returns and everything. It's something to be wary of, and you need to kind of think about that and appreciate the amount of work that would need to go in to do that. Also, one of the other things I wanted to show you was the potential cost savings that are available to you from your design options. So what you could do is you could choose to go with Nest and just say, you're going to design it yourself, and you're just going to take the default options and this sort of thing. But what we worked out is that the potential cost savings to the business of just simple half a dozen decisions, best case scenario to worst case scenario, the cost saving per employee per annum could potentially be as much as £1,000. So with 5 employees, if you did it yourself, went on, you could be paying £5,000 a year more than you needed to pay. And that's sort of lost tax, lost national insurance. You could be paying you could start the scheme in the summer where you could have deferred it 3 months and saved yourselves on contributions. You could be doing that, it's called postponement, on an ongoing basis, and that would save you money. You could choose a pension scheme that, Nest has particularly high charges for your older workers, and it's important that you kind of do bear in mind what your employees are paying as well, because they're not going to thank you if you save money, but they're paying more, that sort of thing. So there's again, so that's one of the pitfalls of the DIY process. So is it okay if I move on to talk about the other options?
Yes, please.
So we talked about the financial advisor. Now, as I said, the financial advisor is not an expert on payroll, so they often leave that. And often employers, the regulator, what I have here is the regulator's guidance on, they do a quarterly report and they explain how many fines, because that's obviously the pitfall of not getting it right, is there's obviously a £400 fixed penalty notice, and you can get fined £50 a day for not fixing things. But one of the things that they say is that often the point that was missed is the declaration. Someone forgot to do the declaration of compliance. The business thought the financial advisor was doing it, the financial advisor thought the business was doing it, and nobody did it, and they got fined. So it's really important that someone's covering all 22 bases for you. You've got some oversight on that, and you're making sure that everything's done. So sometimes things can get left out if you just use a financial advisor. That puts you at risk. And similarly, if you just use an accountant on their own, there are some things that accountants don't do. They don't, as I said before, don't use pensions, don't choose pension schemes, don't design pension schemes. They would leave you to do that. So really a complete solution would be for you to use the accountant and the financial advisor together, if that makes sense. Mm-hmm. So I want to show you this from Standard Life. This is an explanation of the charges and time that a financial advisor typically would make. So if you add up all the details on here, you see that typically those 22 tasks could take a financial advisor to do for you between 20 and 40 hours. Mm-hmm. Now it's a bit shorter than your 20 days because the financial advisor should know the detailed guidance, so they must have done this several times before, so a bit more experience. But they do have to write out reports and everything, and there's about 20 to 40 hours work. And if you to pay, the going rate for that would be about £150 per hour. So that would add up, as you see there. there's a figure on here of £12,000, but typically, if you added it all up, you'd probably find a financial advisor would charge you £3,000 to £5,000 for that service. But it's bespoke. They're going to give you their time, their expertise. They should work in partnership with the accountant. The accountant, I'll give you another piece about the accountant. As you can see, the accountant, as I showed you before, the accountant doesn't do all the tasks, but the tasks that they have to do are more onerous than before because they're going to have to run extra payroll. They're going to have to do extra payroll responsibilities. It's about a third more work again, 30% more work. And what they're going to do is they might charge you for that as well because it's more work. So there's going to be extra costs there, and they're not going to complete all the tasks. I don't think you can avoid those costs. If your payroll, the payroll systems will need to be upgraded to do the employee assessments, and they can't be cut out of the process. The third option of using Workplace Pensions Direct actually works with your accountant and works with your advisor and sort of does the things that they don't do. And so it's all right if I move on to that as an option. So what I've done is I've looked at the market and come up with this solution, Workplace Pensions Direct, which is a big national auto-enrolment specialist, it's a low-cost specialist, because what they've done is they've automated those tasks, the 22 tasks that I talked about before. And they completely handhold you through these tasks. And they've got it down so it only takes their staff 90 minutes to actually do that, which means that they can very much, if it takes 10% of the time, then they charge 10% of the cost that a financial advisor would charge you. They also make sure they're experts in payroll and pensions. So they actually train and support the accountant in setting up the payroll system, and they also they cover all the tasks that a financial advisor would be expected to cover as well. They don't cut the financial advisor out of the equation completely, because there might be some regulated advice opportunities in the business where the regulated advisor could come in and talk about group life or relevant life, or they could talk about the executive pensions for the directors or pension switching, that sort of thing. So it's very much a team process, but all the necessary tasks are done by Workplace Pensions Direct. And because of the investment they've made in systems, that means that they can do it for very much a lot less money. Have you have you set aside a budget for this?
No.
Okay.
As little as possible.
Yes, little bit. Okay, well, the good news is the Workplace Pensions Direct will make it as little as possible. So that £1,000 per employee per annum, £5,000, they'll make sure you make the decisions to keep that cost minimal. And in fact, we assume that as a default, that that's what you want to do, so do that for you. For doing all the 22 tasks, as you can see from this here, Workplace Pensions Direct will do these tasks, and for the size of your firm, it's £525 plus VAT for the setup. That'll take all the 22 tasks from now until next Christmas, when you have to do your declaration of compliance. And on an ongoing basis, it's £19 for the whole firm per month. I'll just explain about, if it's helpful, what the ongoing tasks are, because it's often a question we get asked. Would that be useful? So what I have here is something to explain to you what the ongoing tasks are. But basically what happens is the regulations, when you need to get compliant, which is the setup, but you need to stay compliant. And one of the last things you want is to get across the line of doing a declaration of compliance and then find that there's a risk that an audit, a regulator audit, can come in and look at you and find you've not done things properly. So it's important that you keep compliant each pay cycle. There's a number of tasks. There's people joining the company, leaving the company, people opting into the pension, opting out of the pension, people having to be re-enrolled into the pension. And it's important you give the appropriate communications to your staff and keep proper records that you've got that. And you have to keep these records indefinitely. So they could come in 6 years' time and say, well, where's your records from 2016, 2017? And you need to be able to produce those and show that the right communications were given and the right people put into the schemes. Also, you've got a changing landscape. You've got the contribution levels are going to go up in 2018 and then go up again in 2019 and might go up at the beginning of any tax year from then on. So you need to keep on top of that. Plus the schemes, some of the schemes need to have a certificate. It's a bit like an MOT, and you need to renew the certificate every 18 months. So they'll do all this for you, WPD. And also, unfortunately, all that work that you have to do, the 22 tasks to set up a scheme, is you have to repeat every 3 years. So the £19 a month covers that too. So there's no extra charges in 3 years' time when you have to do all this again. So the other thing I'd like to mention here is the guarantees. So we're working with Workplace Pensions Direct. They guarantee compliance. That is, if you, with their clients, they guarantee that if they get fined by the regulator for a failure, WPD will pay the fine. So they're that confident in this. So it really takes away that worry. They also guarantee that they will do you that cost saving that I talked about, the £5,000 per annum for your firm. They will get it so it's the less, as you said, the least cost possible. They also guarantee there's a service guarantee. They have service level agreements, and you have a dedicated account manager. So your experienced payroll person will have a dedicated person to talk to and help them setting things up and on an ongoing basis. Any questions on pay cycles, that sort of thing. They guarantee a choice of pension schemes. So what they will do is look at the whole market and find out the best scheme for your workers. That's actually one of the duties for you that you need to evidence why it is you've chosen a particular pension scheme. So although a lot of people are going into Nest, they might be challenged down the line, why did you go into that? Nest is particularly expensive for older workers, and it might be deemed unsuitable. So it's really important that you kind of have compared the available schemes to decide which one is best for your business. And there are a number of schemes available. We'll give you the pros and cons of each of that to make that selection easy for you. At the end of the day, workplace pensions direct guarantee their work in. There's a no quibble money back guarantee on any work they do. So if you're not satisfied, you feel they've not done what they've said they would do, then there's a no quibble money back guarantee on that. Is that helpful?
Right.
So to summarise, the options are to do it yourself, but that's going to be 20 days work. There's potential disadvantage on cost for that one. And there's the hassle of having to learn the detailed regulations there. So that's an option. There's the bespoke advice where the financial advisor would do things for you, but it's going to take them 20 to 40 hours, and the charge could be £3,000 to £5,000 for that. Or an accountant might say, well, you could just go in Nest and I'll do the payroll for you. But then that's a combination of the DIY route where you could be making expensive decisions. So all this Workplace Pensions Direct, which saves you 90% of your time, 90% of the money, potential, compared to a financial advisor, and certainly can save you that potential £1,000 per employee per annum cost of doing it yourself. So my advice to you would be that the Workplace Pensions Direct may be the best option for you going forward. How do you feel about that?
What would be the next steps?
So the next step is that what I have here is some data capture form. So all I would need is a few details, as you can see, just the name and address of your business, PAY reference number, company reference number, and that's it. And then we can get started.
Great. Let's do it.
Thank you very much. Thanks for your time.